A very good morning. Welcome to Top of the Morning by Mint, your weekday newscast that brings you five major stories from the world of business. It's Friday, March 21st, 2025. This is Nelson John. Let's get started. IndiGo's stock took off to a 52-week high of 5,190 rupees, fueled by bullish management commentary and expansion plans. The airline expects a profit boost in Q4 FY25, thanks to a surge in air travel from the Mahakumbh gathering and an extended wedding season. Passenger traffic is up by 17% year-on-year, pushing revenue per seat higher. Since the Mahakumbh kicked off in January, IndiGo's stock has climbed 25%, delivering a stellar 58% year in return. In a year, far outpacing the Nifty. But that surge has made it pricier than global rivals, with a valuation of 9.5x, ahead of Air China's 8.8x, and well above the global airline average of 5.5x. Looking ahead, IndiGo is betting big on international expansion, aiming to increase its overseas capacity from 28% to 40% by 2030. It's also adding a new aircraft every week and cutting grounded planes from 60 to 40. However, analysts warn that at its current price, upside potential looks limited. Motilal Oswal and Nuvama have target prices set below its current level, signaling caution despite the airline's strong fundamentals. Eli Lilly has officially launched Mounjaro, its diabetes and weight loss drug in India, after securing regulatory approvals. The move comes as India, the world's most populous country, faces rising obesity and diabetes rates. The dual burden of obesity and type 2 diabetes is a major public health challenge in India, said Winslow Tucker, President and GM of Lilly India. The country has over 101 million people living with diabetes, and obesity remains a key risk factor. Mounjaro, or tirzepatide, is already sold in the UK and Europe under the same name, and as Zepbound in the US for weight loss. With analysts projecting the global obesity drug market to hit the $150 billion mark annually by early 2030s, Lilly sees India as a major growth opportunity. CEO David Ricks had hinted at a 2025 India launch last year, and now it's here. Accenture has sent a warning signal to the IT industry, flagging macroeconomic uncertainty in the US following weaker-than-expected earnings. CEO Julie Sweet noted a shift in the economic environment, with federal spending cuts and contract delays under the Trump administration impacting revenues. The IT giant posted a 5.8% sequential revenue decline in Q2 to $16.66 billion, though it grew 5.4% year-on-year. Looking ahead, it expects Q3 revenues between $16.9 billion and $17.5 billion, but has kept its full-year growth guidance capped at 7%. For Indian IT firms like TCS, Infosys and Wipro, Accenture's cautious outlook spells trouble. Analysts already predict slower growth for India's $283 billion IT industry in FY26, citing high interest rates and geopolitical risks. However, there's a bright spot: generative AI. Accenture secured $1.4 billion in Gen AI bookings last quarter, with total AI-related orders hitting $5.6 billion since September 2023. Now, that's more than the annual revenue of LTIMindtree, India's sixth-largest IT firm. While AI presents new opportunities, traditional IT services face headwinds. As US spending slows, the Indian IT sector braces for impact. First, it was Zomato rebranding as Eternal. Now, CK Birla Group's HIL Limited has renamed itself as Birla New Limited. And Hindalco, India's top aluminum producer, has unveiled a fresh identity. Corporate India is seeing a wave of name changes. But why? Experts say it's more than just a cosmetic change. Next-gen entrepreneurs want a refreshed brand that aligns with their vision but retains its legacy, says Bharadwaj Jaishankar of Indus Law. Some companies rebrand to signal a strategic shift, attract media attention, or differentiate themselves in a crowded market. Data shows over 1,100 Indian firms have changed their names in the last 2 decades, with BFSI, real estate, and IT leading the trend. Interestingly, a third of newly listed companies rebrand within 5 years of their IPO, highlighting the pressure to stand out. But does rebranding impact stock prices? Well, not necessarily. Unless there's real value, like a new product or merger, investors don't react much. For companies, a name change may be just the beginning of a bigger transformation. India has cleared a massive 54,000 crore rupee military upgrade, greenlighting key acquisitions for the Army, Navy and Air Force. Among the highlights, Airborne Early Warning and Control, AEW&C, aircraft for the Air Force, upgraded engines for the T-90 tanks, and Varunastra torpedoes for the Navy. The Defence Acquisition Council DAC, led by Defence Minister Rajnath Singh, also announced measures to speed up procurement, aligning with the government's plan to make 2025 the year of reforms. AEW&C systems, described as a game changer in modern warfare, will boost India's aerial surveillance capabilities. The Army's T-90 tanks will get a power upgrade with new 1,350 HP engines, improving mobility, especially in high-altitude regions. Meanwhile, the Navy's indigenously developed Varunastra torpedoes will strengthen anti-submarine warfare. With these approvals, India is reinforcing its military readiness, focusing on modernization and pushing for faster and more efficient defense procurements. That's all for today. Thank you for joining in. We are eagerly looking forward to our next Top of the Morning episode, which will be packed with the latest in business news. Until then, this is Nelson John signing off. Have a great day.